Hello everyone, I am Charting Man Dan, trader for the last 13 years, technical analyst educator, and in this video we're going to be looking at crypto charts. First things first, NASDAQ daily consolidation underway the last couple of days. Definitely a short-term red flag in the market with the pullback we saw yesterday. I talked about that in depth in the end of the day video that I do related to stocks, but just aware that the broader market has been consolidating for the last 2 days. And bulls are attempting to set daily higher lows today. And we had a situation yesterday where there was a lot of weakness in the broader market. Bitcoin did a good job holding on during regular trading hours, but middle of the night, Bitcoin bears showed up in a big way with one big hourly candle that triggered some downward momentum. So not surprising that the bear break took place on Bitcoin. If you were watching the broader market, there were definitely red flags being fired during the trading day. We had all of our major sectors hitting the lows of the day at the same time, which shows us money leaving the market as opposed to rotation. And so we've got Bitcoin weakness. So Bitcoin was tightening up, and in the last live stream, I was talking about favoring a bull break of this tightening range because of the strength that was taking place in the broader market at that point in time. We broke one resistance level, failed the other resistance, and then had a hard rejection. So whenever you're watching a tightening range or an equilibrium, that's why I talk about it's so important to see follow through, and you've got to take out multiple levels. And that's why a tighter range is better, because on the tightest of ranges, when you get a break, you usually take out all of the levels right away, because it's a cascading effect of stop losses triggering. Whether it's a bull break or a bear break, stop losses trigger and entries trigger enough to take out all of the levels. So there's no doubt that the break is taking place. Bitcoin, the first bull break was 27.3 thousand. All right, great start. But now we've got 27.5 and 27.7, and we only made it up to 27.5 before topping out. So that's an example of a bull break lacking follow through that then rolled over into the bear break. So now the only support that we're looking at in the short term is 25.8, which is the lowest level that we've seen in months. And if 25.8 breaks, I'm then looking at a little level down here, 23.9. You could also look at previous resistance, 25.3 if you wanted a level closer nearby. But we're in a scenario where the bears still don't have anything to worry about on the Bitcoin chart right now. And if we had broken 27.7, that would have been the start of a shift, and then okay, bears need to pay attention. But weekly stair step drop, lower high every single week for the last 6 weeks in a row, inside bar bear break on the weekly time frame, and again, just nothing to worry about. So this is where, you know, the statement that we've been saying, the Bitcoin bulls are not positioned well for any broader market weakness comes into play, because here's Bitcoin now testing the low of the last 2+ months, while we look at the broader market, which is only, you know, testing the low of the last week on some names or the low of the last 2 weeks on the S&P 500. But crypto is weaker. And again, the chart to look at to compare that, if you go to Bitcoin, BTC USD divided by NAS 100 USD, you can see relative strength or relative weakness. And we have had, I don't know what those twos are, but we have had, it's probably rounding, we have had a clear relative weakness pattern ever since this sideways range broke bear. And that is continuing. And right now, Bitcoin is the weakest it's been compared to the NASDAQ in over 2 months. So bulls need help. Bitcoin bulls need help. And we're going to keep the lower highs as our guide. Simple statement for me right now on Bitcoin: if 27.7 is resistance, bears aren't worried about anything. As far as the short-term price action, how about the bounce, hourly downtrend, hourly EMA 12 resistance? If we get over hourly EMA 12, or if we confirm an hourly uptrend, we're going to zoom out and scout a 4-hour lower high. A lot of space for a 4-hour lower high. And patient bears that are looking for entries are patiently waiting for 4-hour lower highs to be the result of bounces on Bitcoin and altcoins, to be looking for a risk reward entry from here. I should say a more favorable risk reward entry. So ETH had a bull break that was much more convincing. And this is why you always got to look back to Big Daddy Bitcoin to dictate confidence. And this goes for stocks as well, but there's plenty of times where you'll have an individual name break a level, but the ETF will not, or you have an individual altcoin break a level and Bitcoin does not. And the analogy that I think of is just, Ethereum bulls, they're off and running. They're great, let's go, we're doing this. They're leading the charge and they look over their shoulder and Bitcoin is not joining. And so you have to be extra cautious when that is the case because the move was given back. We're still holding supports. We're still further from 2-month lows than we are on Bitcoin. We're holding on better, but bulls aren't going anywhere without Bitcoin. So 1770 is support. 1737 is support after that. And again, same thing. We've got a lot of space for a 4-hour lower high to be the result of the next bounce. Bulls are trying to work on an hourly bounce right now. Still struggling to do so. Pretty much just trading sideways. Someone is calling me, so we throw the phone. Hope it's not an emergency. So, hourly EMA 12 resistance, get over it, zoom out, scout a 4-hour lower high. ETH BTC, I'm keeping an eye out for a rising wedge. Why am I watching for a rising wedge here? Because I'm expecting a weekly lower high as the most likely scenario. After this wide range, we've got a tightening range, and if we do not break 709, then it's just a weekly lower high into an equilibrium. So the daily time frame is still an uptrend, and it is still favoring the bulls, but I'm just keeping an eye out for signs that a shift is taking place. And as of right now, that shift is not taking place. The ETH bulls are clearly stronger than Bitcoin, and they will remain stronger than Bitcoin as long as this chart is in a daily uptrend. But just watching for anything under 709 to be a weekly lower high. Just like we're watching for anything under Litecoin's 103.42 to just be a weekly lower high. Is Litecoin's weekly lower high already being set in this equilibrium? That's entirely possible. We just had a very convincing bear break from a 12-hour tightening range. So we had the big move up, healthy consolidation, failed resistance, held support, no red flags, lower high, we're getting really tight. We know a break is coming. Bear break with significant follow through. And that's the kind of convincing bear break where you take out all the support levels right away. So let's just mark these levels on the 12-hour support for Litecoin and let's zoom in. On the first hourly bear candle, we took out every support level that was established. That's conviction. You don't take out one level and then have to worry, well, is there going to be follow through? What if we bounce? Nope, you're taking out everything all at once. Now there's nothing nearby and the follow through follows through in a big way. Still very weak with hourly lower highs. Next time we bounce, we're going to scout a 4-hour lower high to be the result of this bounce and potentially shaping up the weekly lower high. And we're going to look for a break of this Litecoin weekly equilibrium to take place in June because we can't get a whole lot tighter than how we currently stand. LTC BTC, the daily stair-step pattern broke bearish on Monday. And if we look at Litecoin, Monday, little bit of a red flag. It was just a little bit of an early indication because Litecoin USD was still holding support and Litecoin BTC was breaking support. So that's just, again, you can't look at that and say Litecoin's about to collapse, but you can look at that and say, I need to be more cautious as a bull because the pairing is finally weakening. Whenever you're doing technical analysis, you want to identify something on the chart that has been consistent for a prolonged period of time. And when it changes, you make note of that. So Litecoin had a daily LTC BTC daily stair-step pattern 13 days in a row. And when it broke, that is something to make note of. That's something that I do, one of the major things I'm doing with technical analysis is identifying patterns and then watching for the shift. Apple stock has been in a very clear daily uptrend for 2 months. And we are at risk of losing this daily uptrend for the first time in 2 months. We held support by 10 pennies today. So when Apple loses, again, I can say, I describe it as the character of the chart. The character of this chart will change when we lose the uptrend for the first time in 2 months. And that will be something that is certainly worthwhile for making note of. rndr, really nice volatility in both directions. I like the 12-hour time frame for clarity, and right now the bulls are attempting a 12-hour high or low. So we've got the high of the breakout, the low of the big rejection, or I should say a lot of profit taking. 12-hour lower high was set. During the last live stream, we talked about if the bulls confirm a 4-hour uptrend from here, we're going to zoom out and scout a 12-hour lower high. It's exactly how it shaped up. We confirm the 4-hour uptrend, we zoom out, we scout the 12-hour lower high. Did we have an hourly bearish pattern present itself? Little head and shoulders pattern. Again, you always want to zoom in. If I'm anticipating the most likely scenario on a longer term time frame, you zoom in and you find a bearish pattern on the shorter term time frame to confirm that thesis. And so this hourly head and shoulders confirming sets the 12-hour lower high. Now we're looking for a 12-hour high or low. Anything above 233, we need an hourly trend change back to the bulls for the 12-hour high or low to be set. So we're going to look for a bounce to top out. If I'm looking to be a bull and I'm not in a position and I want one, I look at this and say 240 is either the 12-hour high or low or I'm wrong. So on the next hourly consolidation, I look for an entry off of 240. I put my stop under 240 with a bit of wiggle room, and we either confirm the hourly uptrend and I have a good entry for the 12-hour high or low and continue tightening range because we're going to anticipate we tighten up, or we break 240 with enough follow through to knock out my stop, and I was wrong. And it's a small risk. Let's just do hypothetical. Let's say I make my entry at 247 and I put my stop at 237. I'm risking 10 cents. If I'm right and we go to 247 and then we break resistance, even if we remain range bound, the reward is possible, what did I say, 47, 57, 67, and we can go up to 67 instead of 12-hour lower high. That's 2 reward for 1 risk. And then maybe the equilibrium breaks bull, heading into Apple's glasses coming out June 5th. And then the reward is a lot more. You just want to plan for the reward to be more than the risk. 2 times more, 3 times more. Atom, still keeping an eye on Atom and Sol daily falling wedges. It's not a falling wedge that I'm making a bullish entry on because we're not confident in the bulls overall, but it's something I pay attention to. And if we break 1014 with no follow through, it's going to keep this falling wedge alive and just going to keep me paying attention because bigger picture, I'm watching for Atom to try and give us a higher low compared to 843. Sol is the same thing. I'm watching for this falling wedge. I'm not entering on support. If it's a bull market, I'm entering on support, but we do not have enough confidence to be looking at this as a bull market perspective. I'm looking for Sol to give us a 2-week high or low, anything above $16. Again, it's just an equilibrium here. Anything above 16 is a high or low. Can the daily falling wedge break bull? And I don't have a lot of confidence that they will break bull. But again, it's just something I'm keeping an eye on over the next handful of days. Currently in a Tesla short that I keep an eye on here because I'm looking for Tesla to set an hourly lower high. Reverse back burner. Why did I enter Tesla bearish? First 5-minute overbought conditions after bouncing all morning, knowing that an hourly lower high is the most likely scenario. So I grabbed a short, I sold half, I put my stop over the high, risk-free, and now I let it play out. And I either nailed the hourly lower high and have a target somewhere around 181, or I'm wrong and I stop out and don't lose anything. Back burners work both ways. And in this instance, it was a nice bearish back burner. That one isn't even looking at the chart. Someone in the TheChartGuys chat room pointed it out to me. All right. I'm reading the chat room now. Andrew gets the shout out for pointing out Tesla 5-minute overbought. Thanks for tuning in. Thanks for the likes. Just a heads up, Joey, Jungle Funk, Chart Guys, Jungle Funk. Joey is doing a live webinar tomorrow at 5 p.m. He did one in February talking about time frames and utilizing the different time frames and trends like I do in all of these videos for analysis. And tomorrow he's going to do one talking about determining most likely scenarios, which is something I am constantly talking about as well. So it's pretty much going to be the same things that you hear me say all the time, but described differently from a different individual and more organized with those thoughts. So definitely worth checking out. And the link for that, I'll post it in the comments of this video once it's up on YouTube, because I forgot to have the link handy. But you'll see it live streaming on our main channel tomorrow. You got it, Captain Planet. Calling me late for 45 seconds. Come on now. LTC daily chart. Can one still consider an inverse head and shoulders forming, or has that been invalidated? I don't like the look of it. For me, the ideal inverse head and shoulders is just a trend change. It's just a downtrend to an uptrend. And I want to see the right neckline lower than the left neckline so that it's still a downtrend, and then you change the trend to an uptrend. It's still possible to be an inverse head and shoulders if the right neckline is higher than the left. It still meets the definition of the pattern, but I don't trade those patterns because it's not my ideal version. I want to see the downtrend still intact. I make my entry on the higher low because then the downtrend breaking has more bears stopping out to help follow through from that bull break. Whereas here, you break the lower highs, you use up the bears stopping out, and then you get the higher low and higher high. So essentially, I want the position for when the bears stop out. But I would not consider this an inverse head and shoulders personally. 2-day time frame. I mean, I see what you're looking at. I mean, yeah, it could still be. I won't say it won't. It can't. Left neckline, head, right neckline. It's higher than the left, but that still meets the definition of the pattern. We would have to hold 75.32 and break 95 for that to confirm. Thank God for stop losses. Absolutely. I cut my majestic mane. This is 4 or 5 inches shorter. 100 likes, that'd be great. Got a little bit of lower numbers here. People are bored with crypto, as they should be, just because, I mean, you look at the sideways trading of Bitcoin here for 2 weeks. It's the least, I mean, we had a range here, but these are the least amount of trading opportunity that you have. So it makes sense that things get slow and people get bored. And the professional traders are trading other things. I know I keep pointing it out, and I don't want to knock people trading crypto, but you look at the range and the volatility on Riot, and it makes so much sense to be trading Riot and not Bitcoin. On Monday, Riot went up 13%. Yesterday, Riot dropped 10%. Today, Riot bounced 6.6%. I shorted Riot today on the 5-minute head and shoulders here. Grabbed the 5-minute lower high short. Stop over the high of the day. Follows through. I exit 40% of my position, and then I stop out the rest. Uneventful trade, not meaningful, but the volatility is there. I mean, compare Riot volatility to Bitcoin, compare the volume to Bitcoin, and it's just, why would I trade Bitcoin instead of Riot? The only reason would be trading it after market hours. That is the only reason to be trading Bitcoin over Riot. And that is why, again, volume and volatility is dropping off, because traders are going elsewhere. They'll be back. I'll be back. But it's cycles. $88 BTC 12 hour. Nice tightening range. So whenever I look at this chart, You know, someone looks at this chart and, oh man, it's choppy. What's going on here? My brain instantly just goes, zooms in right here, equilibrium. Boom. I know exactly what an equilibrium is. I know tightening ranges are likely to continue tightening and then eventually give us a break in volatility. I don't care about any of this until this tightening range breaks. So my brain just zooms into this. This is all I care about. And then if it breaks resistance, I zoom out and look at other levels. If it breaks support, I zoom out and look at other levels. But until that happens, this is all that exists for me. And I definitely want to be aware of the longer term time frames to anticipate most likely scenarios, but that is you want to find the time frame where you have the most clarity. Boom, all right, that's all that I'm looking at right now. And now I can play around and zoom out. All right, we got the weekly higher low, a tightening weekly range. Weekly EMA 12 has been resistance for 7-8 months at this point. I know nothing changes and the bears keep complete control if weekly EMA 12 remains resistance. If this 12-hour equilibrium breaks bear, that's another rejection from weekly EMA 12. And your analysis is done. And obviously I make that sound very simple, but after you look at 10,000 charts and once you're on year 3, 4, 5, that's what your brain will do. And it's a lot easier because I know someone newer is looking at this 12-hour time frame and trying to make sense of it because your brain doesn't do that automatic thing because you don't have the thousands of reps that have trained your brain to do that. And that's why we keep working at this game to get ourselves in the position where our brains do that. Thanks, Ikanikos. Hey, Frank, we're doing crypto. We're due stocks at the end of the day. I'll post a video at about 5 p.m. going over the stock market day. Do I think ETH BTC weekly falling wedge is valid from September? Yeah, I've been watching it. I've highlighted this a couple times. Definitely. It's something I'm keeping an eye on. So if we set the weekly lower high, which I'm watching for, and reject, we'll continue to tighten up within this potential falling wedge. How do I flip between stock trading and crypto? Very easily. It's not that hard. We're trying to describe why it's easy. Again, when you just do something thousands of times, it's just automatic. It's very easy to switch between crypto and stocks. I generally like to focus on one as primary, and my stocks has been primary for a long time right now. There's really only been 2 major periods of time where crypto has been primary, 2017 into 2018, and then the most recent all-time high run into 2022. Pretty much blue sky breakout. I mean, I'm looking at the Bitcoin chart, and I don't think crypto is going to be my primary trading vehicle for a very long time. Because if Bitcoin gives me the 4-month tightening range that I'm watching for, and bulls definitely want another leg up to try and negate this 4-month bear flag, if we get another leg up, we can trade within this range for 2+ years. What if we get another 2 candles of bounce and then 2 candles of pullback? Next thing you know, that's 16 months. And we're talking, you know, we'll be towards the end of 2024 at that point. We'll see if that's how it shapes up. Don't have a stock recommendation for trading in Canada because I don't trade in Canada and I haven't had any experience with any of those platforms. Interactive Brokers is always my go-to for anyone outside of the US as a recommendation, but I know Canada can be tricky. SPY is definitely given red flags. I talked about that yesterday. I'll talk about it again today. Good job with the stop losses, LTC Beaver Sam. Didn't donate to Locks of Love this time. I have in the past. Coin is range bound. Most of crypto stocks are range bound. Coin is range bound as well. It's definitely on the weaker side. Bulls have to prove to us that they can confirm a daily uptrend, and they have not done so. So the only levels I care about on coin are 55.90 support and 63.75 resistance. We're closer to support than we are to resistance. We rejected from resistance yesterday. We held support today. We're tightening. What would I look for a long-term buy on Doge? A long-term bottom. So right now, the only play would be off of the 4.9 bottom. But we are weak. We are weak. Monthly. I mean, give me a clear... Let's go to the 2-month time frame. I mean, for Dogecoin to have a significant breakout, you need a very clear, significant news event, or you need euphoria to return to markets, and it won't be just Dogecoin that's, you know, seeing a bunch of bullish action. So honestly, it's the kind of thing where what I'm doing with the cannabis sector, which was part of your question as well, is I'm waiting for momentum. I don't care if I nail the bottom. I'm going to enter into momentum so that I'm green right away and I get those gains. And that would be something to establish as a game plan as well. You know, you don't want to be bag holding. You don't want to be trying to build a position over 12 months and it keeps fading and keeps dropping. When there is momentum, it'll be clear. You know, we'll be seeing daily uptrends, weekly uptrends, increasing bull volume, significant gains, social media hype. So you can wait for those things. And yes, you won't nail the bottom, but you'll be green right away. And that's psychologically, I will trade some of the bottom that I miss for the psychological piece of not being stuck in a position that keeps grinding down. Haven't gone over Pepe yet. Pepe is bearish as long as daily lower highs keep forming. Simple statement. So we just set another lower high at 19.3. Just set another one here at 16.7. So simple statement, if 16.7 is resistance, the bears have absolute complete control. And all we've got is that 105 low and the recent low of 13.1. So two support levels, lower high resistance levels. We have not had a break of the lower highs since we topped out at all-time highs, and bulls will not do anything as long as daily lower highs keep forming. Do I think the lack of utility and endless scams are finally catching up to crypto? No. I think it's just, I'm calling this market environment the last year and a half, the great washout. It's the perfect name. Tell all your friends. The great washout. Everybody got into it post CVID. Everybody was making money. It was easy. It was the highest concentration of traders that markets have ever seen in the history of the world. Absolutely. And we topped out and we entered a bear market and people lost money and it was no longer easy and it's not fun and you stop talking about it with your friends and you stop trying because you got frustrated, and that's where we stand. And so you're seeing that in every single market. You're seeing that in every single sector. And crypto, certainly as much as any other sector, if not more. It's just cycles. I mean, you hear people talk about market cycles all the time. Zoom out and we're talking decade-long, multiple decade cycles. This happens all the time. Euphoria, fear, greed, despair. It's just constant cycling of cycles. And so we are in a great washout period. and eventually the bulls will return and easy money will return. That might be next year. That might be in 7 years. That's why recognizing the market environment is so essential so we can adjust our trading, our strategies, our game plans. The amount of back burner trades that I took in 2021 versus the amounts that I've taken in 2023, a fraction. 5% as many. It's not the same bull market. It's not the easy buy the dip. Sorry, Frank, we're sticking to crypto in this stream. But thanks for stopping by. All right, I'm going to wrap it up here. Got to get ready for the end of the market day. Probably going to stop out of this Tesla short. Still a 5-minute downtrend, but no clear hourly lower high set yet. Need to confirm the 15-minute downtrend if there's going to be any follow through. So again, Bitcoin bears have complete control as long as 27.7? As long as 27.7 is resistance. We're looking at 25.8 as support. And that level is in play. And if that level breaks, we'll be looking towards daily oversold conditions at that point. And that's that. Stay protective, utilize stop losses, be picky. Be picky in this market environment. This is not the market environment to be trading aggressively or actively. Certainly not as actively as more volatile periods. This is the time to be studying up, practicing, racking up capital and adding it to your account. Odd jobs. That's how I started. Painting houses, yard work, make $1,000, put it in my stock account. Get your hustle on. Appreciate you all. Do good things.